The Nifty as well opens with a cut of close to around 80 points odd.
200 points lower is what the Nifty is at right now.
Right now, Nifty is down 150 points. A 30 to 40 point recovery is what we've seen there.
100-point recovery from the lows. 18,200 or so was the low, and we are back above 18,300. Nifty and the Bank Nifty both coming up, very, very smartly. The last leg of the pullback started at about 240 or so, 240, 245, and you can see that sharp move, and that last sharp move itself on the Nifty, I think, was worth some 90 points.
Well, as the tape suggested, we were under pressure today, but we recovered considerably from the low point of the day. Hello and welcome to CNBC-TV18. You're tuned in to Markets Today, the show where we track around 6 hours of the day's trading action and cover it in top 5 headlines. I'm Nigel D'Souza. Let's run you through the headlines for the day. A late pullback helps the Indian indices close flat after taking heavy losses early trade, triggered by a surprise move by Japan's central bank. Reliance and IT stocks lead from the front, while concerns on China's reopening drag the realty stocks. Asian equities fall as the Bank of Japan shocks global financial markets by unexpectedly doubling the cap on its 10-year yield. The news also sparks a yen rally. Metal stocks lose sheen as metal prices drop on concerns of waning demand. Hindalco, JSPL, JSW Steel and Tata Steel, all of them end with cuts of around 1%. Just slides 2% after Reliance Retail Ventures announces plans to trim its holdings in the company to meet the minimum public shareholding norms. Sterling and Wilson also sees red after the promoters, Shapoorji Pallonji and the company, as well as Khurshid Yazdi Daruwala, will sell up to 5.27% stake in the company. Hinduja Global Solutions slides 3% after it offers to buy a chunk of its shares at a hefty premium. Meanwhile, Shipping Corp of India closes with gains after hitting 52-week highs in trade, as an update in the company's demerger process and increase in tanker rates boosts the stock. Well, here's what we have lined up on the show for you. It's a power-packed show, as always. In Market Opinion, we have Dan Feynman of Credit Suisse, as well as Abhilash Narayan of Standard Chartered Bank. And Big Corporate Voices will be joined by Suresh Narayan, CMD of Nestle, on the outlook for the next year. Well, as has been the case, it was a volatile trading session on the Wall Street. The indices took on heavy losses in the first hour of trade that was triggered by persistent fears of global recession next year and a surprise move by Japan's central bank. However, the Nifty and the Sensex, well, they staged a late pullback and they ended with only minor cuts. The Sensex was down close to 100 points. The Nifty was down only around 35 points odd. Reliance and the IT stocks, well, they led from the front. Prashant standing by to run us through all of those details. Well, Prashant, another volatile day of trade.
Well, today was a story of incredible amount of pullback, both on the Nifty and the Bank Nifty. The day started lower, and it only went deep into the red as the Bank of Japan actually came out and did something which no one expected them to. They took up the level to which they are allowing the yields to trade in Japan. That sent shockwaves. Markets around the world came off. But in the last 2 hours or so, things got better. Global markets did a little better. US futures calmed down. And here, there was a very strong recovery as well. It was a normal kind of a correction by close, some 40, 50 odd points in the Nifty, and the banks as well doing quite okay. Broader markets also saw a pullback. Both the mid-cap and small-cap index intradays will tell you that. What led the pullback, the one common name between yesterday and today was Reliance Industries, top contributor to the pullback. These are not day-on-day top gainers, but what contributed the most? TCS, which was a loser on the other side yesterday, contributed a number 2 place. ICICI Bank, Axis Bank and Adani Enterprises were some of the other top contributors. Under pressure, SBI Life was a meaningful loser. iShares and UPL were the other Nifty cuts. What was under pressure? We've been highlighting over and over again the fact that PSU banks are pulling back. The PSU bank index from the middle of last week is down 7.5%. UCO, IOB, Central Bank, sugar names have had 2 days of rally. They all pulled back. Sakti, Dalmia, KCP, and there were names like Godrej Properties, Angel One, and a few others which came off. Some railway stocks that came back into rotation on the gaining side. IRFC, RVNL, FACT was higher. There was PNB Housing which did well, and there was something like a Gravita India which did well as well. I mean, pretty volatile, to be fair, not just here in India, but what we're seeing out there in the US as well. The 20-day, I think, remains the level which the market needs to take out, as we've been saying, for more bullishness to come back. And that lies about 100 points away from where the market left off today. Back to you.
Thanks a lot for that, Prashant. Well, time to get in some expert opinion. Dan Feynman, co-head of equity strategy Asia Pacific at Credit Suisse, said that a recession in the US as deep as the one in 2008 would be bad for Asia and emerging markets, but a slowdown of that magnitude that they are expecting could actually benefit Asian economies. Let's hear him out.
I think if we have a very hard landing in the U.S. of a recession as deep as the great global recession in 2008, 2009, that would be bad for Asia and emerging markets. But a slowdown of the magnitude that we're expecting for the U.S., actually, it could be pretty good for Asia. One factor is it could lead to a weaker dollar, and a weaker dollar typically is associated with good performance for emerging markets, Asia included. I think that India still has some important strengths relative to other markets in the current global environment. India has a very robust economic cycle. It's got a good structural outlook in an environment where developed markets are heading into a slowdown. India's good growth, I think, deserves to trade at something of a premium. Deep recessions are typically associated with deleveraging events, and that's not the situation at present. What we have is a garden variety, fairly mild, short-lived recession lying ahead of us.
Well, moving to the second headline now, the Bank of Japan shocked the global financial markets by increasing the cap on the 10-year yield from 25 bips to 50 bips. Asian equities, they fell, and the yen strengthened after the announcement. Lata joins us to tell us more about this hawkish turn by the central bank. Lata?
Basically, the Bank of Japan is going to allow the yield on the 10-year to rise from 0.25, where it was capping it, to 0.5%. Just for those who are not following Japan very closely, the Japanese central bank has had a policy of yield curve control, YCC as they called it. It was a way to keep yields low so that they could kickstart the economy. Now that is coming under a bit of a question because globally yields have gone up so much that, as the BOJ says, is creating financial issues. And Japanese inflation has gone up to almost 2%, 1.99. Previously, it was in 2014 that it had seen such levels. After that, it has been, even negative numbers in terms of Japanese inflation. So there was a need. But it was a totally unexpected move. The current BOJ governor is going to retire or end its term in April, and any change was expected only then. So the market is totally not positioned for this change by the third largest economy. Now, why is it important? It's a sign that the last major central bank has also pivoted and become hawkish. It is believed, the market's perception is now this means that Japan will exit its loose policy. It was the only, the cross-asset funding by using yen was a very large trade because it was the only cheap currency. You could take cheap yen loans and then cross-fund other assets. That source now is kind of drying up. Japanese investors, a lot of Japanese money has been invested in US treasuries. As it is, the Fed is going to buy less and less. There's already a tightening there. One more set of people may stop buying. When Japanese investors, who are among the biggest globally, find that there is a little more money to be made in their own assets, they may flee or at least move a little bit out of other assets as well around the world. That explains why you saw risk assets everywhere falling. And then the last and the most important impact, Japan is the third largest economy. A rise in rates over there can reduce Japanese pace of growth as well, such as it is, however, slow that pace has been. So this is definitely only slightly less important than, you remember Powell's pivot in end November 2021, it's almost as important an event as that. according to market participants.
Okay, all right, Lata, thanks a lot for decoding that for us. Well, the latest move by the Bank of Japan shows the most dovish central banks are also trying to tighten policies. And that's the word that's coming in from Abhilash Narayan of Standard Chartered Bank. Let's hear out what he had to tell us earlier today.
Effective tightening of policy came as a surprise to the markets, and that's why we are seeing such sharp market reaction. I think the other reason why we've seen equity markets slide down is because Bank of Japan was the last bank which was still holding on to accommodative policy. So with the shift that we've seen in Bank of Japan's stance just now, what it means is that even the most dovish central bank is looking to effectively tighten policy by allowing bond yields to move higher, and that at the margin has hurt the sentiment for the equity markets. Equity markets could remain under pressure for the next few sessions, given the shift in policy that we have seen. If I look at the implication for, let's say, Japanese yen, we've seen that dollar yen has moved lower by around 2.8%. And what today's move can mean is that we could see dollar yen touch even 130 potentially over the next couple of days. So that could be the big move in currency markets. But yes, it's the timing and the surprise element that is leading to such a sharp market reaction, in our opinion. We are still a bit more cautious on the equities over the next 1 to 3 months, and we've recently gone underweight global equities as well.
Meanwhile, Paul Schutz of Schutz Research says that Japan is still 300 basis points behind the United States and that the Bank of Japan is under immense pressure to react to the changing policies by other central banks. Let's hear him out.
Profound pressure inside the Bank of Japan to get the Monetary Policy Committee of the BOJ to get its act in order and start to raise interest rates. So I think this was something that could not be fended off anymore, especially after the rate rise in the U.S. Last week. That's the first thing. The second thing is Japan is still miles behind everybody else. I mean, Japan is 300 basis points behind the U.S. And so at this point, this is barely nothing relative to other central banks, even in Europe. I think this is not a pivot. I think this is a technical surrender to the hawks inside the BOJ, who were furious with the top leadership of the BOJ for being so asleep. And so I think this is a little bit of a capitulation, not a pivot.
Well, coming back home then, Bank of Japan's surprise policy tweak has weighed on auto major Maruti Suzuki. The stock was already under pressure after the chairman, Mr. R.C. Bhargava, said that high taxation on automobiles was impeding growth of the industry. Parishit Luthra, well, he's joining us to tell us more about Maruti chairman's comments. Parishit?
Meeting of Maruti Suzuki with the media, there R.C. Bhargav expressed concern about the high rate of taxation. We asked him about his reaction to the clarification on SUVs, the cess and taxation on SUVs, and the possibility of MUVs being taxed at a higher rate as well. R.C. Bhargav said, how can we really expect the industry to grow when the tax rate on SUVs is 50%? He also said that they leave it to the wisdom of policymakers. If the policymakers don't want the auto industry to grow, or they're comfortable with the auto sector growth of 5 to 6% annually, then he won't fiddle with the wisdom of policy making. He also said that we need a rationalization of tax brackets across the automotive sector with a special focus on reducing the regulatory burden on small cars. He says that the auto industry, if it has to grow, then the small car segment must continue to grow. And right now, because of the tax burden, the market is shrinking. When it comes to new launches, Hisashi Takeuchi of Maruti Suzuki said that they will be showcasing 2 new SUVs in the Auto Expo. There will be an electric SUV concept also showcased. We're learning from our sources that one of the SUVs will be a rival of the Thar, the 5-door Jimny that will be launched by Maruti Suzuki later next year. We'll also see a rival of the Sonnet that is also slated for a 2023 launch that will be seen at the Auto Expo from the Maruti Suzuki stable. On FTAs, R.C. Bhargav says that we must drop the protectionism attitude. We must be open to reducing tariffs and get access to global markets for Indian automobile exports.
Well, moving to the third headline today, metal stocks, they lose their sheen as metal prices fell on concerns of waning demand. Hindalco, JSPL, JSW Steel and Tata Steel, all of them closed with cuts of around 1%. Manisha is standing by to run us through with a quick analysis on that. Manisha?
Well, after a good month in November and most part of December as well, we are looking at some profit taking coming in for metal prices. And this is because of the surging COVID cases in China, which have hit the industrial activity and other sector as well. Also, when you look at the housing prices in China, those have declined the most in last decade. The investment in fixed markets, etc., also seems to be declining. China actually has reported 5 new COVID deaths for December 19th, and that really seems to have soured the mood and sentiment here. Also, as I said, the Chinese business confidence fell to near decade lows. It has been about low volumes as we head towards the holiday week, also seems to be putting some pressure onto the metal prices. Even as November, December have been good months, when you look at the current year 2022, many of those metals actually are closing this year in the negative. We have seen copper prices decline by 13%, steel is down 16.5% for this year, iron ore is down 7%, aluminum 14%, zinc 11.5% on the weaker side. So another year where we are looking at weaker moves coming in. The quarter could be on the positive side, but not 2022.